IMF statistics suggest that global GDP in dollar terms for 2015 will fall by $2.7 trillion. Kevin, are we looking towards a US dollar recession?
Put that way, I suppose you could argue that. I don't see the dollar weakening in any way. I see the U.S. Economy is sort of the best thing the world economy has going for it right now. That's going to pull in investment into the U.S. There's going to be demand for dollars.
But of course, for emerging markets, they obviously trade a lot with the dollar and have a lot of reserves in this. So if it did weaken, what sort of impact would that have on emerging markets?
That's interesting because I think a stronger dollar is likely to overall be of a benefit to emerging markets. Emerging markets are basically on sale right now for U.S. Multinational corporations, for investors. So this should be a magnet for investment in emerging markets, which they obviously badly need at this point in time. So if the dollar was to weaken, that's just one less reason for Americans to deploy their money abroad.
But if the greenback were to slip, wouldn't that be good news for emerging currencies? I'm of course thinking of the yuan.
To a certain degree, but recall that the Chinese actually have decided to finally move away from their peg to the dollar. So a weaker dollar, would that change the dynamic? That's possible, because it's one thing to say about China's finally deciding to move toward a floating exchange rate, like really move toward a floating exchange rate, make fundamental steps that make it clear to everyone that it's serious about doing so. It's chosen some convenient timing to do that. It's pulling away from the dollar at the same time that the currency is increasing and there's sort of downward pressure on the yuan. So that's giving a lift to manufacturers for sure, and that's probably a good thing given what's going on in the Chinese economy. The demand for services and just fundamental domestic demand in China is still strong. People are excited about that, but it's the manufacturing side that's struggling at this time, and that's partly because of the yuan's link to the dollar as it's strengthened over the past few years. So it's true that at least on the margin that a weaker dollar is not going to be beneficial to China. But I think we have to keep these things in context. The Chinese economy is not the Chinese economy we knew of 10 years ago. It's not an economy that it's entirely dependent on manufacturing the way it was, nor do the authorities want it to be so. So I'm not sure that a weaker dollar would necessarily change the dynamics, the situation, the context around the yuan very much.